Good morning, everyone. Thank you for your patience and thank you for joining us today. So, let's start. My name is Drakshana Siddiqui, and I will be your host for this webinar on the UAE Excise Tax Refunds and Exemptions, a comprehensive guidance. So, before we dive into the session, let me provide a brief introduction to our company. So, ACME Group has established itself as a trusted tax and financial solutions provider across the GCC region and Egypt. We are committed to delivering high quality solutions tailored to the needs of various business across different industries. Our focus on quality and expertise has allowed us to build long term relationships with our clients. Our exceptional team consistently delivers value efficiently, making us the preferred service provider in the region. Now, let me introduce our esteemed speaker for today's webinar, Ms. Gopika Kumar. So, let me just give you a short uh, introduction of Ms. Gopika Kumar. Ms. Gopika, she is a seasoned tax and audit specialist with extensive expertise in excise and VAT taxation, financial audits, and tax advisory services. Her career spans the private sector and non-profit organizations, where she ensures meticulous compliance with tax and financial regulations. Gopika's proficiency includes managing tax returns, conducting audits and reconciliations, and providing accurate financial insights. She has a demonstrated track record in excise tax management, VAT handling, and comprehensive financial audit preparations, reflecting her commitment to excellence in every aspect of her professional practice. So, before we start, I encourage everyone in the audience to share your questions in the Q&A section. They will be help create an interactive session and ensure that you gain maximum value from today's webinar. So, your participation is essential to the success of this event. So, I would like to hand over the stage to Ms. Gopika Kumar to begin the webinar. Ms. Gopika, over to you. Thank you.
Thank you, Draksha. Thank you for nice introduction. Good morning, everyone. So today our webinars relies on the topic about the UAE excise tax, refunds, exemptions, and deductions. So in the upcoming minutes, we will be looking into a brief about the introduction of excise, just to have a familiarity for what is excise, what are excisable activities, what are the points of taxation, who is supposed to pay excise tax, etc. And moving on, we will be checking out what are exempted excise transactions or what are exemptions as per law for excise. Then what are the applicable deductions, how the refunds work, when can a refund be claimed, etc. So in the upcoming minutes, let's have a valuable discussion on this. Moving on, next slide. So yeah, excise tax. When introducing excise tax is a form of indirect tax in UAE. It has been introduced through Federal Decree Law number 7 of 2017, and it took effect from 1st October 2017. So in UAE right now, explicitly two indirect forms of taxation are in prevalence. First is excise tax and another is value added tax. Mostly value added tax is very familiar with most of the subjects, but for excise tax, it's not that much familiar. So what is excise tax? Excise tax is a form of indirect tax which is imposed on specific goods which are identified as harmful for human health and environment in general. So the law says excise tax is a form of indirect tax imposed on the source of availability. This is a specific statement to be noted. It is imposed on the source of availability of specific goods to UAE, the consumption of which are considered as harmful for human health and environment. When excise tax is introduced through federal decree law in 2017, generally three categories of products were identified as excise goods, which are tobacco and tobacco products, energy drinks, and carbonated drinks. Later on, the law has an addition in 2019 through a cabinet decision released in August 2019, which took effect from 1st December 2019, adding three more categories of products categories of products. Actually, two more categories, which is generally referred as electronic smoking devices and sweetened drinks, along with liquids and tools used in electronic smoking devices. So when we tear into the law, now as of today, there are mainly six categories of goods which are considered as excise goods. The specific activities conducted on these goods will be applicable for charging excise tax, which are tobacco and tobacco products, energy drinks, carbonated drinks, e-smoking devices, liquids and tools used in these e-smoking devices, and finally, sweetened drinks. Now let's see what are the excise activities. Next slide. So excise tax points. Now we know what are excise goods. Now we have to know what activities on these specific excise goods will trigger the payment of excise tax. So as per Article 2 of the Federal Decree Law on excise tax will be imposed on the activities given below, like given in the slide as you can see. First, obviously, production or manufacture of excise goods within the territory of UAE will be supposed to charge for excise tax. Second one, import of excise goods. When any person is importing any of these six categorized excise goods to the country of UAE, they are supposed to report and pay excise tax on the import of those goods. Third, release of excise goods from a designated zone. So now I have to mention a little bit brief about designated zone. Designated zone, mostly people will be aware of designated zone in VAT concept, but for excise, designated zone is a little bit different. Anyway, the general concept of excise designated zone is same. Designated zone is a fenced, enclosed area where there is proper monitoring for the movement of goods in and out. But why excise designated zone is different? Any place or any warehouse or any factory, you can declare as a designated zone upon a request and approval from Federal Tax Authority. And this designated zone will be considered as exclusively a place outside the state for tax purposes, for excise tax purposes. That's why we are specifically mentioning excise designated zone, and it will be mentioned in following narrations also. So release of these excise goods from an excise designated zone, not the point, excise designated zone will be triggering the chargeability of tax. And finally, stockpiling. Stockpiling, the terminology stockpiling refers to the accumulation of stock. But for excise tax, stockpiling has a broad narration, like it has some methodical calculations and all. For understanding, stockpiling is, for example, when a law regarding excise is introduced, or when a material change in terms of excise tax effect is introduced by the authority, what all stocks available with any person which are excise goods and are not tax paid, they have to report and pay excise tax on those goods. There is a, like, stockpiling is a broad sense. I'm not going more into it, just giving a heads up. Stockpiling is the excess of excise goods being held by a person which are not excise tax paid. So, in shorten, the excise activities upon which excise tax will be imposed are production, imports, release of excise goods from an excise designated zone, and finally, stockpiling of excise goods in the United States, Arab Emirates, United Arab Emirates, UAE state. Moving on, next slide. Now, here we have generally two rates of excise tax in this country. It's 100% and 50%. Except for sweetened drinks and carbonated drinks, all other four products are charged under 100%. Tobacco and tobacco products, any form of tobacco products like shisha molasses, cigarettes, any nicotine pouch, anything, tobacco and tobacco products will be charged under 100% of excise. Electronic smoking devices, tools, and liquids used in these e-devices will be charged at 100%. Energy drinks will be charged at 100%. Carbonated drinks and sweetened drinks will be charged at 50% on the excise price of the goods. So now we know what is an excise tax in short. We know what are excise activities, and we for excise activities. Now, who is supposed to pay tax? Moving on to the next slide. Yes, excise tax obligation. Who is actually liable to pay excise tax? As we know, production, import, release of goods from designated zone, and stockpiling triggers the point of taxation. Obviously, any person conducting any of these activities will be responsible for paying excise tax. responsible for charging excise tax and pay. So the prime responsible person for excise tax obligation will be the person conducting any of those mentioned activities. Now, it don't end with that. If the goods, excise goods, are found being tax not paid, and the person, the prime obliged person is not paid the tax, the very next chain, the very next obligation comes to the next person in the supply chain. Or we can say, other than the person obliged to pay tax directly, all the people in the supply chain are also, all people involved in any of the excise activities in the supply chain are also equally responsible for ensuring and making excise tax payment and compliance. And the third one is warehouse keeper. So who is a warehouse keeper? I have to mention. As we mentioned, designated zone. Every excise designated zone will be having a warehouse keeper. Okay, there is a separate registration for warehouse keeper. There will be a warehouse keeper number who will be, it will be allotted to any person who is registered as a warehouse keeper, and he will be responsible for all the excise goods within the designated zone, stored within the designated zone. And when these goods are released to mainland, when excise goods are released to mainland from excise designated zone, we just saw that it triggers an excise payment. And if the original person who is releasing excise goods found non-compliance in payment of tax, the warehouse keeper is the next person who will be responsible for paying the excise tax. Or in other words, we can mention this warehouse keeper or any other people involved in the supply chain of excise goods are perfectly responsible, 10% responsible for ensuring excise tax applicable on those excise goods are being paid. So, excise tax obligation, if we in shorten, obviously it is the first person who is engaging in any of the excise activities which we mentioned. For example, a person manufacturing excise goods, a person importing excise goods, a person releasing excise goods from a excise designated zone, and finally a person who is having stockpiling. He is the prime responsible person to pay excise tax. Second, if he fails to do, any parties involved in the supply chain of these excise goods will be held responsible for payment of excise tax. And in case of designated zone goods, the warehouse keeper who is in responsibility of that particular excise designated zone is equally responsible for ensuring the payment of excise tax applicable on the excise goods being released from such excise designated zone. So here we have just shortened the familiarity. We have just a brief introduction on what is excise, actually excise tax law, and what says excise tax law for the country. We can move on. Next slide. Yes, so from this, we have a poll question here. Among the below, who is primarily responsible for paying excise tax? We have four options. It's just a judgment option. Company A is engaged in the manufacture of cigarettes in Dubai. Company B is a retailer who purchases carbonated drinks, which is an energy drink, from a wholesale distributor in UAE, Sharjah. Company C is engaged in the design and production of cigarette packages and pouches in Russia, all of the above. So let's see what are the responses. Who is primarily responsible to register? The first person to register and pay for excise tax. So we are having responses. Yes. Yes. So as I can see, majority of people selected A option, which is the right option. The manufacturer of cigarettes in UAE is the person who is manufacturing cigarettes in UAE. Company A is primarily responsible for registering excise. Now let's move on to the main topic. Let's dive into our topic, which is exemption. Move on to the slide. Yes. So now we have seen what activities trigger the liability of excise tax. Now we should know any activities or any exemptions for paying excise tax. Usually, for this designated zone concept, people will think like the activities in the excise designated zone are exempted from excise goods, excise tax. Generally, tax concept, the activities in the free zone or designated zone are considered to be exempted. Let's see what excise tax law says for excise goods. The law says, as per Federal Decree Law, Article 12, those goods which are exported to outside the UAE are exempted from the chargeability and thereby payability of excise tax, which will be otherwise applicable on them. So actually, this is a mere statement. We have to go into it. We'll look forward. We'll look more into it. Just on the first heads up, any goods which are exported to outside the country are exempted from excise goods. Now let's see just for a deep understanding what are exports. Exports is well known to everyone. Export refers to those transactions which the goods or services are transferred from original country to another country. The supply of goods or services to a place outside the country is called exports. But for excise decree law, there is a definition for export, which is like we have to take very care. Excise decree law says the departure of goods from the territory of state are considered as exports. The departure of goods from the territory of state are considered as exports. Let's look into it what it is. Moving on to the next slide. So, in short or in clearly, what are exempted excise goods or exempted transactions? The law specifically states that excise goods exported will be exempt from tax. As we have seen, exports are exempted from tax where they have not been released for consumption in the state, and also the law stipulates the cases where goods are treated as exempted due to export of such goods. So I can mention here all exports, every export transaction or all cases of export transactions are not exempted from excise tax. There are specific way of exports or specific methods of export or specific types of exports, we can say, from the excise decree law perception, which will be treated as exempted from excise tax. If we see in the first point, if goods are exported to outside the state, provided they are transferred to the point of export in suspension according to the customs law. So the law first point says, the first mentioning from law is those exports which are moved under customs suspension will be exempted from excise tax. Secondly, the law is telling if the goods are exported to outside the state directly from an excise designated zone, if the conditions applicable for warehouse keeper is well satisfied. So I'll just give a brief narration on this. We have seen what is designated zone, what is excise designated zone, and obviously the concept of a designated zone for tax purpose is generally same, be it VAT, excise tax. The concept behind a designated zone is same. What it is, the activities conducted within a designated zone will be in tax suspension. So we have seen one of the triggering point or tax point for excise tax is the release of excise goods from excise designated zone. So that means till the point of release, till the goods are not released from a designated zone, those goods are not tax paid. Those goods are not under tax suspension. And when, I mean, under tax suspension, that those goods are under tax suspension. When these goods are moved from designated zone to UAE mainland, there triggers the obligation for tax payment. So what if when we are moving these goods from designated zone, which is already not tax paid, even on production, if we are producing within a designated zone, the tax is not paid because it is an excise designated zone. Then we are moving these goods from excise designated zone to any place outside the country. Here triggers the eligibility for exemption. The point, the goods which has never been released for consumption matters here. When you release the excise goods to UAE mainland and then export, then those goods are not exempted. On release of goods, you have to pay tax. On exports, you have to do what all excise law prescribes for the export. But those excise goods which are already under excise designated zone, which are under tax suspension, are exported to a country as such. It is called moving goods in suspension, tax suspension, are such to the country outside UAE, then those goods are called exempted goods. because we didn't pay excise tax on the original excise triggered activity, and it's already exported to outside the country. So the scenario of paying tax is never coming in between. These types of transactions, these types of exports are only exempted from excise goods. So let's again read to the law. The first point, as I read, they are exported outside the state provided they are transferred to the point of export in suspension according to the customs legislation. More specifically, if the goods are exported to outside the state directly from an excise designated zone, if the applicable conditions of warehouse keeper is satisfied, it is like I have told you, every designated excise designated zone will be having a responsible warehouse keeper, and this warehouse keeper has many conditions to be satisfied as long as he is serving as a warehouse keeper. For example, they have to maintain all the records of excise goods moving out. They have to maintain the records should maintain specific data related to excise goods like excise quantity, applicable as per a federal tax authority, then item barcodes of the product, description of the products, place of destination. So every record should be properly managed by warehouse keeper, especially a stock movement. Everything should be managed by warehouse keeper. And if those conditions are satisfied, such exports are exempted from excise goods. Now, the third point, where the purpose of exports is to consume the excise goods in the course of an international journey departing from the state. Some companies purchasing for, distributing or supplying, for example, energy drinks for flights, for consuming in flights. So, such companies, if they are transporting their goods with the applicable suspension from customs authority. It's like we will be declaring some, like every exports will be having corresponding customs declaration. There are some declarations which are treated as the goods are in movement under suspension. Suspension means the goods are never opened, the goods are never used, the goods are never altered unless otherwise needed for the purpose of movement. So such movements, exports are called movement in suspension. The goods are as such when it is originally packed, it's never opened. And there are specific declarations dedicated for the suspension proof. So if such companies who are supplying goods to consumption in an international journey, for example, using in a flight, consuming in a flight, and if such goods are moved in custom suspension, those goods are also exempted from paying excise tax on its original triggering point. And finally, when these are purchased by from a duty-free shop, so we know departure duty-free shops in the airports and all. If someone is purchasing goods from duty-free shop and they are directly leaving the state, they are not supposed to. They don't want to think about excise tax applicability on that particular excise good. Okay. So in short, what are exempted excise goods? Exports are exempted excise goods. Exported goods are exempted excise goods, but not all exempted good or exported goods are exempted. Only those exported goods, either they are exported directly from a free zone, excise designated zone in suspension to the place outside the state, or they are exported from a company. They moved the goods from the point of loading under suspension itself for consumption in an international journey. And finally, if the goods are purchased from a duty free shop by a person who directly leaves the country at the time itself, these three categories of exports are exempted excise goods. Now, let's move on to the next slide. Now, exports. Generally, as per the law, exports can be identified as two types of exports. One is direct export, and second is indirect export. Direct exports are those exports. The exporter, the seller, we can relate it with an example. A company in UAE is exporting excise goods to a company outside the UAE. So the company in UAE itself arranges for all the transportations, for all the free shipping, everything they will be taking care of till the goods reach the point of destination. This is called direct export. So we can see an export of excise goods where the supplier is responsible for arranging the transportation or appointing a freight agent by the supplier himself to do so is called a direct export. So when a direct export will be exempted. Okay, the direct export will be exempted when the goods are physically exported by the supplier to a place outside the state, when the goods are actually the goods are moved outside the state, and the exporter retains any of the below I mean, not any actually, the exporter retains below documents. First, a customs declaration, which is like a bill of exit or bill of entry, just like a bill of entry, which the taxpayer will be filing with customs department, ensuring the movement of goods outside the country. Commercial evidence, you can say the invoice and packing list, etc. Then either of a shipping certificate and an official evidence that prove the export, or a customs declaration that proves the suspension arrangement of customs duties. This is the law statements. So shipping certificate, definitely it's a bill of lading or airway bill, whatever it be. And official evidence, it's an official authorized, authenticated evidence from a customs department at the point of exit, which will be supporting the movement of goods from the country to outside the country. There is a condition: the excise goods are not used partially or fully or altered in the time between supply and export, except to the extent necessary to prepare the excise goods for export, which is in short called suspension. The excise goods should be in transportation under suspension till the point of exit. So this is direct export, which is like, I don't think anyone will be having more doubt. It's just export, the general export concept for anyone. Only point, the always triggering point is the goods should be moved under suspension till the point of exit, and the customer should retain, I mean the supplier should retain, exporter should retain these documents: customs declaration, commercial evidence, official evidence, and the transportation document. Now let's see what is the next type of export. Moving on to the next slide. Next type of export is indirect export. So as we say, direct export is the exports in which the movement of goods, the transportation or carriage of goods will be made by the supplier. Obviously, in indirect export, the customer, the buyer in the other country will be arranging for the transportation of goods from the country to their country. So an indirect export, an export of goods to an overseas customer who arranges for the collection of goods from the supplier in the state and exports them, or has appointed a freight agent to do so on the customer's behalf, on his behalf, of the buyer's behalf, is called an indirect export. An indirect export shall be exempt from tax. Obviously, the same conditions applicable for the direct export are applicable for indirect export also. But to be mentioned, the the overseas customer should provide these documents to the sub-exporter in the country. The overseas customer physically exports the goods supplied to a place outside the state. The overseas customer obtains and provides it to the supplier below documents: customs declaration, the same documents: customs declaration, commercial evidence, official evidence, and transporting document. Same, the main condition: the goods should be transported under suspension. The goods should never be utilized, never be altered in between the transportation time, until and unless it is that much necessary to prepare the excise goods for next movement. So under suspension is the basic criteria for becoming eligible for excise exemption. So there is a last one statement included: the authority may decide not to accept the documents submitted if they do not constitute sufficient evidence of the exit of excise goods from the state, and may specify alternative forms of evidence according to the nature of exports or nature of the excise goods being exported. So even though if we obtain, or if the direct exporter or the exporter under the case of an indirect export holds all these documents, obtains or secures all these documents, the authority may ask for any further document which can prove that the goods were moved in suspension, the goods were exported actually, for claiming the exemption on excise goods. So this is in short for exemption of excise goods. Let's move on to the next slide. Next slide. So now we have a poll question. We have seen what is exemptions now. So are exemptions and deductions same? Let's see. Yes, so majority and above 95% mentioned as no. So the answer is no. Though it sounds like same, when we tear into the tax laws, exemptions and deductions are not the same. Let's look more into it. Going to next slide. Yes, deduction of excise tax. Let's first see what the law says. As per Article 16 of the Federal Decree Law, the cases where excise tax paid becomes eligible to claim as deduction, the conditions of which are stipulated in executive regulation. So that highlighted statement is actually pertaining to deduction or which makes difference between exemption and deduction. Those goods or those excise goods which are excise tax paid and then later it becomes eligible for claiming deduction are generally coming under the purview of deduction. So what is in excise exemption? We have seen the taxes were not paid. The taxes, for example, if the goods were produced under excise designated zone, designated zone is a place where the goods were stored in tax suspension and they directly exported from the designated zone under tax and customs suspension till the point of exit. There is no payment of tax triggered in case of exemption eligibility for that particular excise goods, but for deduction, obviously tax would have paid. And some of the deduction eligible transactions might have happened on that particular excise goods, and that is called that makes the difference between deduction and exemption. Now see what are the eligible transactions or eligible excise goods movement which will be considered for deduction. First one is tax paid on export excise goods which have been exported. Second one, tax paid on excise goods which have become a component of another excise goods. Amounts paid to authority in error is the third one. We will be just having a look into all these 3 points separately. So tax reduction shall be taken against excise tax value paid on the same goods at any previous time on any previous activity relating to that same good. The taxable person should be in possession with sufficient evidence proving the tax paid on same goods and shall be submitted to the authority upon request. Actually, let's look into one by one. Next slide. Hmm. So this deduction of tax, actually, one more thing to be mentioned is about indirect pay. So if a tax on the same good was paid by another party in the supply chain, the taxable person must retain and submit upon the request below documents. For example, if we are purchasing, we have seen what are the excise activities upon which excise tax to be paid. So what if a second person in the supply chain, as we told, that person is also involved in the responsibility of paying excise tax. What all documents he should be maintained for proving that the goods are the excise tax paid. That documents are mentioned. Copy of purchase invoice, a declaration from the supplier, and a proof also in short, confirming the excise tax is paid, and information which demonstrate to the authority, like any information that the authority will be satisfied that the excise goods are being subjected to excise tax. Any such proofs, any of these proofs should be available with the persons in the supply chain if they have to claim for a deduction. If they are triggering any of the transactions that becomes eligible for deduction, that is indirect pay. Let's move on to next. So first, as we have seen, it was export. First reduction eligibility transaction was export. If tax is due on the excise goods in the state and the same excise goods are exported to outside the state, the taxable person shall be eligible for deduction in any of the if any of the following conditions are met. So we have seen for exemption how the export work. So whatever other methods, other way of movements for export. For example, goods are released from excise designated zone to UAE for first, then in a later time it is exported. So when goods are releasing from excise designated zone, obviously as we have seen, excise tax is supposed to pay. In later period, if the same goods are exporting, there becomes the eligibility for deduction. The excise tax paid on release, the taxpayer can claim as deduction. So what are the conditions? The excise goods are exported outside the state. The excise goods are exported to an implement state and tax has been paid for the goods in that state. It's generally export. Implementing state is a part of GCC Council Agreement for Excise Tax. But as of now, any export, even export to Oman or export to KSA, all are considered as general exports. So in short, if goods are removed or goods are moved out of the territory of the UAE, and if they are used in the course of an international journey departing from the state. So ideally, what is the difference of deduction and exemption for this export? First exemption, I hope it's all clear. Second exemption, the goods might have first eligible, like triggered for tax payment once, and later those tax paid goods are exporting. Then it will be eligible for it becomes eligible for deduction. Now let's look the next transaction. Moving on to the next slide. Yes, excise raw material used to excise finished goods. Obviously, right. If we are purchasing tobacco, if we are importing tobacco, import is an excise activity as we have seen. Tax should be paid on that tobacco. But if this tobacco is used for making cigarettes, cigarettes are also excise goods. So on production, excise tax is supposed to be paid for production of cigarettes also. So the already tax paid tobacco is incorporated in another excise chargeable good. So the tax paid on that tobacco, we can claim as deduction, providing all supporting documents we are submitting to FTA. So this is the second point, excise raw material used to produce excise finished goods. Then the tax paid on those raw material can be claimed as deduction. And the final transaction we can say, moving on to the next slide. Yes, amount paid to authority in error. This is a self-assessment judgment transaction. The taxpayer needs to assess themselves if they have paid any amount authority in error. For example, the taxpayer might have declared wrong quantity, like more quantity than actual quantity, or they might have given wrong details of item, or they might have given wrong price of the item. So any such errors, if the taxpayer has sufficient adequate evidence to support the error, he can claim a deduction on the excess or the wrongly paid tax. So I'm just shortening the eligible transactions for deduction. One, export, which are not exempted exports. Second one, use of excise goods as a raw material for producing another excise good. And finally, amount paid to authority in error by mistake. And these all should be sufficiently proved with proper evidence to the authority for claiming the deduction. So here we end up the scenario of deduction. Now let's move on to refund. Then what is refund? Let's move on to the next slide. Yeah, we have a poll question. From below, which one cannot be a case of deduction? Let's see into it. Your time starts now. So import of tobacco for using as a raw material for cigarette, import of sweetened drinks for sale in UAE, but wrong quantity reported resulting in more tax paid, release of energy from excise designated zone for sale in UAE local market, which cannot be a deduction. Let's see. Yes, as we can see, most of the people voted for final option, release of energy drinks from excise designated zone. Obviously, there is no case of deduction in that point. Now let's move on to the next slide, which we'll be looking on what is refund. Yeah, sorry, this to be mentioned. What is the point of? So we have seen that those excise goods upon which excise tax is paid are only supposed to take deduction. So what determines whether excise goods paid or not? First, the general concept we all know if we pay to the authority. But in some other cases, for example, we are purchasing from another person. We don't know what his if these goods are paid or not. So it is being considered that purchasing goods that were subject to tax and on which tax has been paid is considered as paid. So actually what this point says, any person who is purchasing excise goods other than an excise activity, other than an import, in short, any person purchasing excise goods from a local market, UAE market, he can, if he is exporting or if he is using it as a consumption for producing finished goods, he can also claim for deduction. If he can prove that excise tax is paid on that, we have already seen the case of indirect payee of excise tax, where which all documents he has to maintain for proving the payment of excise tax. And the second one is actually very important point, the right to deduct excise tax arising in the same tax period for which the tax is due. I'll just give you one example on this. A company is importing excise goods in January 2025 and he is exporting in January 2025. Then this will be considered as like he paid the tax and he is taking deduction. On import, he is supposed to pay. He's registered, provided he is registered. Okay, a non-registrant has to pay tax on the point of import itself. Only a registered person can get the relief of tax payment till the submission of return. So for a registrant who is importing some excise goods in January 2025 and he is exporting it in the same month, providing all his documents prove that, he can go for deduction. Like there is no actual payment becoming, but the goods are considered as tax paid for the purpose of deduction. Now let's move on to the next slide. Yes, refund. Obviously, when someone is taking a reduction, there will be a negative balance, which is supposed to claim for refund. When tax paid or payable on excise goods is less than the tax deductible or tax paid. So we can club this sentence. When tax paid is less than, tax paid is more than tax deductible or tax payable is less than tax paid, then there will be a negative balance for excise tax account and the taxpayer becomes eligible for not eligible taxpayer will be having a tax refund option. A refund situation or status will be triggering. Let's see what is the time frame for excise refund. A claim for a refund of excise tax which the taxable person is entitled shall contain such information and data as required by the authority and be submitted to the authority within 5 years. So that is the important. Within 5 years from the date the person has right to apply for the refund. We will see what is the right to apply. When is the right to apply for the refund? So from the date when the person became right to apply for refund, within 5 years, he can claim for a refund. He can submit his refund application. Where a taxable person has failed to submit a return for any period as required under the decree law, the authority may withhold any refund until such a time as the outstanding returns have been submitted. Not only return, any non-compliance is being noted by the FTA, noted by FTA in the side of taxpayer, the tax refund will be withheld. It is a general understanding for every tax law, every authority, every country for taxation. Let's move to the next slide. Moving on. Yeah. So we have C. A taxpayer should submit his refund application within 5 years from the date when he got the right to apply for the refund. Now we are just checking what is the right to claim. So as prescribed by the law, the authority is not obligated to, this is the law statement, okay? As prescribed by the law, the authority is not obligated to refund any remaining excess tax to a taxable person if less than 2 tax periods have passed since the end of the tax period in which the excess tax arose. In short, a person got an excise refund in Jan 2024. His right to obligation starts from April 2024. At least 2 tax periods should be passed from the tax period in which excise refund arose. So from April 2024 till the end of 5 years, the person has time to apply for the refund. Now, secondly, during this period, the tax refund shall be carried forward and utilized for the incurred tax liability or penalty obligation automatically by the system. So as we say, if a person is having excise refund as on Jan 2024, it will be automatically carried forward to Feb 2024 and March 2024, and any liabilities to FTA incurring on these periods will be automatically set off against the brought forward refund, and the remaining will be eligible for claiming refund from April 2025. So in short, 2 tax periods should be crossed for becoming the taxable person eligible for applying for a tax refund. Next, move to the next slide. It's a continuation where the authority is required to refund an amount of excess tax. The refund must be made by the later of 2 months following the submission of the claim. So this is the time frame from authority. So if a person has submitted the tax refund application, the authority can give the refund, can actually execute the refund later of 2 months from the date of application, or if the authority is undertaking a refund audit within 21 days from the end of the audit. And the authority may at its discretion refund the amount of excess. It is telling that it is a provision with the authority, like authority can even give the refund before this time frame of 2 months or 21 days if the authority is finding that the taxable person's registration is cancelled or authority satisfied the taxable person is actively running his business. There is no chance of cessation or there is no other chance of stoppage of business. He is actively taking care of business, and he will be having upcoming responsibilities or tax incurrence for payment and all. If the authority is satisfied on that, authority can give the refund before this time frame event. Going to the next slide. Yes, we have a poll question. It's just a question what we have discussed right now. How many excise tax periods to be passed for having the right to claim for a refund? We have options: 5 tax periods, 4 tax periods, 1 and 2. Let's see. Yes, as we can see, it's 2 tax periods. Most of majority assumed correct. It's 2 tax period as we have just discussed. 5 year is for the latest time. 2 year is the right to claim. Now let's move to the next slide. It's excise tax refunds in special cases as per law. Other than the general taxpayer refund transactions, what are some special cases are prescribed by the law for applying for a refund? First is like where tax is paid by a foreign government or international government organization or diplomatic bodies, etc. If they are purchasing any excise goods, then they can go for a refund if the provided conditions are satisfied, which is like the excise goods are acquired for official exclusively for official purpose. For example, in a laboratory test, something like that, exclusively for official purpose, they can for a refund for the tax paid on the such goods. Then excise goods are not acquired for the purpose of resale or commercial purpose. Anyway, the exemption from government side. Let's understand the tax paid by government or international organization or diplomatic bodies on the purchase of excise goods, they can claim refund. Going on to the next slide. This is a little bit like important, where tax has been incurred in the state by a person who is registered in an implementing state, and excise goods were then exported to another implementing state, and claim for a refund of the tax may be made subject to the following conditions. Conditions are like the person is not registered in the state. The state means UAE. Evidence is provided confirming that the person is taxable person in another implementing state. Evidence is provided confirming that tax was paid on the excise goods in the state where the evidence includes the value of tax paid. So actually this is a result of GCC General Agreement on Excise Tax, where implementing states generally means the GCC states. But as of now, we are just in UAE. As of now, every transaction, even with an implementing state, is considered as a as general with every other country. So here it says if a person is paying registered in another implementing state and he is purchasing excise goods and proving that he paid the tax there on export to that country, he can claim a refund, which is like as of now we can just have this knowledge only. Let's move into the next slide. Yeah, if a non-tax, everyone can have a question in mind. Okay, we all discussed about these deductions, exemptions, and all for those who are registered. What if a non-registered person is buying some excise goods, and because he is not supposed to register, because he is not engaged in any of the excise activities which we have mentioned, but I am purchasing some excise goods and I am doing some business. How can I claim? So, if a non-taxable person who is conducting business directly exports excise goods or which tax was previously paid by a taxable person, he may submit a refund application subject to the satisfaction of below conditions. So, in short, if he is exporting those goods, he can claim for a refund. If the excise goods are general condition for export, if the excise goods are physically exported to place outside the state, if he submits the evidence proving payment of tax on the excise goods in the state, provided such evidence proves the amount of tax paid, and he retains a customs declaration. Actually, in short, every export documents which we have discussed for the cases of exemption and for the cases of deduction, should this non-registered taxable person also possess for claiming a refund for the export of excise goods which he has purchased from a taxable person. That is in short. And next slide. I hope this is the end of the refund. Yes, yes. If a non-taxable, the just previous slide, it was mentioning about direct export making by non-taxable person. We have seen what is direct export and what is indirect export. This is just mentioning about indirect export. The same criteria matters just for the indirect export also. It's just the law mentioning the non-registered person can claim for an indirect export refund on the excise tax paid on the excise goods. The same criteria is mandatory for proving the exports. Going on. Yes, a tax, how to, like, what are to be mandatorily included in a tax refund application, or what are the mandatory conditions for submitting a tax refund application? One, the claim should contain the information, data, and documents specified by the authority and to be submitted through means specified by the authority. What is the means specified by the authority? The refund claim should be submitted through MRR tax portal. Second one, the claim relates to minimum of 1 month. We understood that 1 month period will be triggering for the submission of eligibility to right to claim. And finally, the claim relates to the tax paid on goods where a minimum value as and when specified by the authority. There should be of minimum value as and when specified by the authority. These are the methodology of refund claim. It is through the portal. It needs to be relating to at least 1 month period, and it should be having a minimum amount as and when required by the authority. The authority shall issue a decision regarding whether to approve or reject the refund, and anyway, any decision will be informed to the taxpayer within 20 business days from the date of submission of refund application. So this is the end of our session detailing about exemption, deduction, and refund. Thank you for all joining the webinar. Thank you for your patience. I am heading to Ms. Draksha.
Thank you so much, Ms. Gopika Kumar, for providing such an insightful and engaging session. We will now move on to the live question and answer segment. Before we proceed, we would like to let you know that the webinar feedback section is now live, and we would greatly appreciate if our fantastic audience could take a moment to share their valuable feedback. And additionally, we also request you to leave us a review on Google by simply scanning the QR code displayed on your screen. And your feedback is important to us. Thank you so much, guys. And now we invite Ms. Kopika Kumar and Mr. Austin Lucas to address the questions from our audience.
Hello, hi everyone. We have quite a few questions today. So we will start with the first question, which asked by Mr. Premnath. So Gopika, how can we claim the refund if the original tax return period is more than 5 years?
Hello, Mr. Prem. Thank you for your question. Actually, excise return is a monthly return policy for excise return. Unlike for VAT and all, there is no return which is more than one. There is no quarterly return. There is no half yearly return. It's monthly return. So every company registered for excise tax are supposed to submit a return every month, and the return will be submitted in the subsequent month within 15th of the subsequent month. So this case of 5 return period is not. Am I right on this question? I hope. So every return, if the person is submitting return for January 2025 in February 2025, and the excise refund is generating in January 2025 return, his right to claim starts in April 2025, which he can submit in May 2025. So from April 2025 till the end of 5 year, he can submit a refund claim for Jan 2025 refund return submitted. Hope I could answer your question.
Yeah, Mr. Premnath, if you have any add-on to this question, you can definitely post and we will take that up. Moving on, we have other interesting questions as well. So this is a question by Mr. Saddam. I'm looking to start commercial distribution of e-cigarettes in the UAE. My supplier is importing these devices from Poland and I want to sell them in the UAE market and duty-free stores. Am I required to register for excise tax in the UAE?
So for this question, I have identified the statement, my supplier is importing from Poland and I am selling in UAE. That means you become the local purchaser, in which you are not supposed to register, but you have to retain all the documents from your supplier proving that the excise tax was paid on the import of these goods. You are not supposed to register as a local purchaser. And if you are exporting, if you are selling in local market, it's fine. There is no need of any if you are exporting, the last thing which we have discussed, like a non-registered person export, can go for a refund if you are having all the supporting documents, as we have mentioned. Thank you for your question. Nice question.
All right, we have another question by Mr. Yasir. Hi, Ms. Gopika, good morning. Well explained the concept of excise tax refund. I have a question about claiming deductions for exports. I have a few export shipment for which I have the invoice and bill of lading. Will I be able to claim deduction for excise tax with these documents?
Okay, so this is document as we have seen. Just having an invoice and a bill of lading, we cannot satisfy for claiming deduction. Sorry for that, but definitely you can approach if your goods are already exported through a port in UAE, you can approach your customs authority for getting the customs documents, which is like very important, which are termed as actually official documents. The customs declaration, the customs exit, which is being authorized by the customs authority, all these documents are very mandatory for claiming the exports. As I have said, as we have seen, the authority is having the right to reject any document. So even if we have to have all the main documents, there is a chance of getting, there is a risk. So without having these main documents, it is very risky to apply for a reduction. Thank you. Thank you for your question.
All right, moving on. We have another question from Miss Nadia. What is the difference between direct export and indirect export?
Okay, direct export, I will give you an example. If I am a person who is exporting excise goods from Dubai to Saudi Arabia, and I am contacting a shipping agent, or I myself have all the facilities for arranging the transportation till the point of exit. I will be finding a vessel, I will be sending the cargo till the point of destination. That is a direct export. But if my customer in Saudi Arabia is arranging for all the exportation, he will be taking care of all the documentation. I will just invoice them. Then it is called indirect export. Thank you for the question.
Okay. So there's another question from Miss Renuga. Hi, Miss Gopika. We are producing goods in the mainland and are considering moving production to the designated zone. Are there any considerable benefits in moving production to the designated zone from an excise tax perspective?
So definitely yes, it's a big yes, because as we have seen, even in our intro section, the production in mainland is always tax triggered. You have to pay tax as and when you produce, and you should register, and you should pay tax at the tax return of that relevant month. But for production within excise designated zone, it will be under tax suspension till the time these goods are released for consumption from designated zone. Released for consumption in the UAE mainland for consumption from designated zone. So if you're asking about benefit, yeah, there is a benefit. The major benefit is the cash flow, then reporting, then deferring of tax till the point of release from designated zone. So you will be having lot of benefits for shifting your production from mainland to an excise designated zone. Yes, thank you.
All right. So this is the last question we have received. So I urge participants to post any questions if you like us to answer. So, anyways, uh, this question is from Mr. Mustafa. What are the documents we need to prove the consumption of raw materials and claim deductibles?
Very interesting question. The documents to prove the consumption of raw material. One is report and the production formula in your company. If you are producing cigarettes, what are the? It's a general formula. This much tobacco will be using for this much cigarettes. So it's a production report and formula within your company. Then the declaration, for example, if the person is importing tobacco from other country, there will be an import declaration. There will be a proof of tax paid on that import declaration, and this should be shown along with this production formula. Then your finished goods details, the production of finished goods details. which has been produced and upon which the consumption of these excise tax paid raw materials are used. This is the general documents which needs to maintain along with an internal stock movement. Internal stock movement is mandatory for every person, irrespective of whatever it be. Stock movement is important. So along with the stock movement, these documents should needs to be uploaded for supporting this deduction. Authority can ask for many other documents if they want to get satisfied on this particular point, but this is the basic documents needs to be maintained. Thank you for the question.
All right. It's just that Mr. Premnath has asked a follow-up question. So, because of the FT audit, claiming the refund was delayed for 5 years. Okay. Now, how can he submit the refund claim now after this 5-year period? The initial question was, how can we claim the refund if the original tax return period is more than 5 years? Now he's saying because of the FT audit, claiming the refund was delayed for 5 years. How can we submit the refund claim now after the 5-year period?
Actually, this thing like because of the audit tax refund claim is delayed, you could have submitted a claim. FTA might have take a time for approval or they might have put it on hold, but you could have claimed before. Now, as the 5 years have passed, you can submit. You can try submitting a claim, giving the scenario of an ongoing audit. I'm just giving that. But as per law, the time is closed. You cannot claim. But still, as an FT, because FT audit doesn't prohibit anyone to submit for a refund in the portal because refund is submitting through the portal and you can definitely submit for a refund. But still, try to submit through the portal along with the details of FT audit. They will might again open the case due to the case of audit. They were not allowing the credit to be credited to the account. So you can just resubmit, try to resubmit an application in the portal itself for refund and check with it. We can check with it. You can check with it by submitting because as per law, the 5 years is done, and the FT audit is not prohibiting anyone to submit a refund within this 5 years of time because it is a system generated procedure. If 5 years is submitted, 5 years is completed, the refund option in the portal will be disappearing. So the case that due to FT audit we cannot claim, it will not be that much supporting, but still try to apply for another refund. And if FT is coming back with resubmission comment, you can just tell this. 5 years we were under audit and so the FTA refund was rejected once. So we are reapplying. Yeah.
Yeah, so that's pretty much it. We don't have any further questions to address at the moment. So the rickshaw, you can take it from there.
Thank you so much, Ms. Gopika Kumar and Mr. Austin Lucas, for delivering such an informative and engaging session. And a big thank you to everyone in the audience for joining us today and contributing to this enriching experience. So, your presence and active participation have truly made this session valuable and impactful. So, we look forward to connecting with you again in our future webinars. And until then, if you have any further queries regarding excise, VAT, or corporate tax, please feel free to drop us an email or give us a call. The contact details are on the screen. And I would like to really, really thank the wonderful audience. Thank you so much once again. Have a nice day. Take care.